If you have bad credit and you're trying to get approved for a car loan, your down payment might be the single most powerful tool you have. Not your credit score, not your income, not the dealership you walk into, your down payment. I'm Gary, the bad credit car guy. I spent 26 years as a general manager of an independent used car dealership overseeing thousands of subprime deals. And in this video, I'm going to tell you everything you need to know about down payments, how much you actually need, what happens when you don't have enough, how your trade-in factors in, and exactly how to use your down payment to get the best deal possible. This is the video I wish every bad credit car buyer could watch before they walked onto a lot. Let me start by explaining why down payment matters so much more in subprime than it does for buyers with good credit. When a lender approves a car loan, any car loan, they're taking a risk. They're betting that you're going to make your payments. With a good credit borrower, that risk is relatively low. With a subprime borrower, that risk is higher. The lender knows it. The dealer knows it. And the way lenders manage that risk is through the structure of the deal. Down payment is one of the most important parts of that structure. Here's why. When you put money down on a vehicle, you immediately reduce the amount the lender has to finance. That means if something goes wrong. If you stop making payments and the lender has to repossess and sell the vehicle, they're less likely to take a loss. The more equity in the deal up front, the safer the lender's position. That's why subprime lenders require down payments. And that's why the amount of your down payment directly affects your chances of getting approved, the interest rate you're offered, the loan term you qualify for, and your monthly payment. Down payment isn't just a formality in subprime. It's a fundamental part of whether your deal works or doesn't. So how much do you actually need down? Let me give you real numbers based on 26 years of doing this. In subprime auto financing, lenders typically want to see a minimum of 10% of the vehicle's purchase price as a down payment. On a $10,000 vehicle, that's $1,000. On a $15,000 vehicle, that's $1,500. But here's what I want you to understand. 10% is the floor, not the target. 10% gets you in the conversation. It doesn't necessarily get you approved. The sweet spot in subprime is closer to 15 to 20% down. At that level, you're giving the lender a comfortable cushion and you're showing them you have skin in the game. That combination significantly improves your approval odds, especially if your credit profile has some challenges. And if your credit is deep subprime, we're talking scores below 550, recent repossessions, open collections, very short job history. Some lenders are going to want to see 20% or more before they'll even look at your deal seriously. Now, I know what you're thinking. What if I don't have that much? That's a real situation, and I'm going to address it. But first, let me tell you what happens when a lender counters your deal asking for more money down, because this is something I talked about in video 2, and I want to go deeper on it here. In video 2, I walked you through what happens after you hand in your credit application. I explained that lenders respond one of three ways: an approval, a counteroffer, or a decline. One of the most common counteroffers in subprime is a lender coming back and saying they'll approve the deal, but they want more money down. Maybe you came in with $1,000 down on a $12,000 vehicle, and the lender comes back and says they need $2,000 down to approve it. That's a down payment counter. When that happens, your finance manager is going to come back out and have a conversation with you. They're going to tell you what the lender needs and ask if you can make it work. Here's my advice in that situation. If you can come up with the additional down payment, do it. A down payment counter is not a bad thing. It means the lender wants to do the deal. They're not declining you. They're telling you exactly what they need to say yes. That's valuable information. If you absolutely cannot come up with more cash down, that's where your trade-in becomes critically important. Which brings me to the next part of this conversation. A trade-in vehicle can absolutely count as part of your down payment. And in many cases, it's the most valuable tool a bad credit buyer has. Here's how it works. When you bring a vehicle into trade, the dealer assesses its value and gives you a trade-in allowance, a dollar amount they're willing to credit toward your new purchase. That credit goes directly toward your down payment. So if you need $2,000 down and you have a trade worth $1,500, you only need to come up with $500 in cash. The trade-in covers the rest. But here's where it gets complicated. And this is something a lot of buyers don't think about until they're sitting in the finance office. What if you still owe money on your trade-in? If you owe more on your trade than it's worth, that's called being upside down or having negative equity. And that negative equity doesn't disappear when you trade the vehicle in. It gets rolled into your new loan. So if your trade is worth $5,000 but you owe $7,000 on it, you have $2,000 of negative equity. That $2,000 gets added to the amount you're financing on your new vehicle, which means your loan amount goes up, your monthly payment goes up, and your approval just got harder, not easier. This is why I always tell buyers, know what your trade is worth and know exactly what you owe on it before you walk into a dealership. You can check your trade value for free at Kelley Blue Book at kbb.com. And you can find out your payoff amount by calling your current lender. If you're significantly upside down on your trade, be honest with your finance manager about it up front, because that information is going to come out anyway. And knowing it up front lets them structure the deal around it rather than getting surprised by it. So let's talk about cash versus trade versus combining both, and which approach gives you the best shot at approval. Cash down is king in subprime, period. Cash is immediate, it's certain, and lenders love it. If you have cash available for a down payment, use it. A trade-in is valuable but comes with variables: the value of the vehicle, what you owe on it, the condition it's in. A trade can help significantly or complicate the deal depending on those factors. The best position to be in is both, some cash down plus a trade with equity in it. That combination gives your finance manager the most to work with and gives the lender the most confidence in the deal. Here's my practical advice on how to approach your down payment. First, save as much cash as you possibly can before you go car shopping. Even an extra $500 in cash down can be the difference between an approval and a decline, or between a workable monthly payment and one you can't sustain. Second, know your trade situation before you go in. Value it, find out your payoff, and know whether you have equity or negative equity going in. Third, be flexible. If a lender counters asking for more down, take it seriously. It means they want to do the deal. Find a way to make it work if you can. And fourth, don't stretch yourself so thin on the down payment that you can't make your first payment. Getting approved doesn't help you if you're set up to fail from day one. Down payment strategy is one of the most important things to get right before you go car shopping with bad credit. The buyers who walk in prepared, who know their number, know their trade situation, and have realistic expectations, are the ones who drive home in a car. I'm Gary, the bad credit car guy, 26 years in the business. Everything I put out here is real, not theory, not generic advice you could find anywhere. What actually works in a real subprime deal. In the next video, I'm going to talk about what your credit score actually means to a subprime lender, what the tiers are, what happens at different score ranges, and what even a small improvement in your score can do to your deal. That's coming up next. Grab the free guide in the description. The 7 things dealers check beyond your credit score. It goes hand in hand with everything we've been talking about in this series. Subscribe so you don't miss the next video. Leave your questions in the comments. I read every one. I'll see you in the next one.